Hey folks, Tom Chantal. Welcome to Option X and Tom's Trading Room, my market update for July 19th, 2018. And there's a reason why I decided to do this today, and I'm going to get into it here in just a moment. But let's go ahead and go through the four corners. First, let's talk about the S&P. The S&P and the Dow and stocks in general are really trying their hardest to get up there and take out those old highs of January, but we've got to get above 280 and close above 280, and I really think close above 280 for a couple of days, and that'll build in some good support at this new latest resistance level. This is very interesting because I think we're going to have a little bit harder time getting up there than we typically would, and I'll show you why in about 3 slides. All right, but right now it still looks fairly bullish. All right, there is a one thing that you could take a look at here. We had a darknet signal. Oh gosh, this was back at the end of June, and that was when the S&P was down in the 260s. It went to cash, meaning that darknet signal is now, it's not a sell signal, but it's no longer a buy. All right, because the easy money, as darknet would call it, has been taken out of the markets. All right, so again, it doesn't mean that the market's going down. It just means that the chances for it to continue to go higher have gone way down. All right, so let's take a look and see what else it may be helping us to determine what's going on in the stock market. Bonds. All right, well, now TLT, this is the ETF for bonds that we look at. And as you can see here, I'm discussing the 123 price resistance area held, all right, and ascending support line had been broken. Now, what we typically look for in the stock market is, in order to see stock prices move higher, I like to see what I call institutional buyers getting into stocks, but also getting out of bonds. And as of yesterday, that's exactly what happened. We saw institutional investors getting out of the bond market. This, believe it or not, is actually good for stocks, so long as we don't see what happened in January happen again. And that's where traders were dumping every fixed income investment like their hands were on fire, okay? So as long as you don't see any huge moves one way or another, this is actually good for the stock market. Let's take a look at currencies. This is the Currency Shares Euro Trust, FXE, and here we saw, now, taking you back into the beginning of the year, we were in a box between 117 and 120. We're now boxing again, but we're boxing between 111 and 113, and what's interesting is we're starting to create this triangle wedge, which has now got resistance right there at the 50-day moving average, but it also has support very close to the lows that happened in the end of May and also at the end of June. So we'll be keeping an eye on this one. If it stays in the wedge, it's not going to matter for the stock market, because the stock market likes to see the bond market slightly go down, likes to see the currency markets not being very disruptive, okay? And it likes to look at one more thing, and that's commodities. And so now we look at oil, or USO, which is the ETF for oil. This has been trending higher pretty much all year long, all right? We had a pullback in mid-February. That's when we had our energy opportunities report that went out. And any of you that followed that, you got to be happy. You got to be patting yourselves on the back, because oil has just had an incredible year, all right? You don't have to look any farther than the gas pumps to realize that oil and energy has gone higher. I think the seasonal bullish outlook is now over, okay? But it doesn't mean we're not going to see pops here and there like we saw yesterday. If we do get moves up, as long as they're not huge moves that we've never seen in a year, this is actually good for the stock market, because, again, what's good for oil is good for producers. What's good for producers is good for the energy retailers. What's good for those is good for the stock market, because there are stocks, lots of stocks in the market that make money when the price of oil goes higher. Okay, so I'm going to leave you with this. Why is it becoming harder and harder now? Why is the easy money gone in the markets? Why do I believe the easy money's gone? Well, we're going through earnings right now, and I like to say earnings season, Q2 earnings season, is in like a lion, out like a lamb. That means we get all the good earnings reports in the first half of earnings, and then the weaker ones come out after that. Take a look at the money calendar. This is July, okay? Now, I know we're nearing the end of July, but you can see here that we've had nothing but green on the screen, okay? And if you take a look at the month of July, markets have been pretty much going in one direction. Okay? But this week ends a lot of that green. So as we head into next week and as we head into August, the leaves are changing colors, folks, in terms of what's happened in the past 10 years. And although there's no guarantees, all right, when I see the same thing happening over and over again, it makes me think that I want to go with what that quantitative data is telling me. Okay? So be careful going forward. Be careful in terms of what you're picking. Be a little more balanced. And obviously, take less risk. All right? That's my message for today. That's my message for this week, folks. Hey, thanks a lot for coming in. Hopefully this is just what you needed, and we'll see you again sometime real soon from Tom Gentile, OptionX Tom's Trading Room. Have a great week. We'll talk soon, guys. Bye.